you want to move from an accounting firm or a large corporate into a startup or scale up or fast growth business and don't really know how to prepare yourself or whether you would actually like working for a company like this? Well, today I'm going to take you through what a startup or scale up actually is and why the culture is quite unique compared to an accounting firm or a corporate. Hi, my name's Alysha Randall, and I'm a fractional CFO and founder of Fast Growth Consulting. And I also train new and aspiring CFOs and finance leaders such as yourself. So if this is something that you're interested in, then please hit subscribe so you get my weekly updates. So today I just wanted to talk very specifically about the industry of startups and scale ups. So I have been working for startups and scale ups since 2006, so quite a long time, and that whole time has been in London as well. And I probably will stay in this industry for the rest of my career. It suits me, and I really like that kind of fast pace. So it is a very unique culture with these founder-led businesses. And if you've moved from a firm or you want to move for a firm or you're switching industry, then it can be quite a change. And sometimes it can be a little bit of a culture shock. I thought I'd share this really funny cartoon because actually this is true. So what is a startup or scale up or fast growth business? So essentially a startup is a new company that wants to grow quite rapidly, and it's generally with a unique product or service, often creating a new market or being part of a brand new industry and really disrupting the existing market. So this is why it can be quite exciting, because you may really enjoy these new disrupting industries. So if I think about the companies that I've worked for, so Love Film at the beginning, back in 2006, it was really disrupting those blockbuster shops where you would walk into a store, you would hire a video or DVD cassette, take it home, watch the video, and then bring it back again. So with Love Film, originally the product offering was sending DVDs through the post, and you would choose what you wanted to put on your list, and then Love Film would send you something. And then obviously it transitioned to that digital film streaming, and then Amazon bought this company, and Amazon Prime in the UK originally was on that Love Film platform. The next one was a fintech business called Funding Circle. It was really difficult for small businesses to get a good loan, and the only place really was a bank. And then also as a retail saver, the interest rates are really low. I mean, obviously now that's changed, but back then the interest rates were really low. They'd been low for quite a long time. So it was really difficult to find good investments in order to get a decent return. So this is where Funding Circle created a peer-to-peer lending platform whereby retail savers would be able to lend their business, lend to hundreds and hundreds of small business lenders and get a decent return back. And then similarly, small businesses would be able to get loan without having to go to their bank. And usually this loan in the early days was approved within 24, 48 hours. And then obviously that got cut back to mere hours or minutes to get approval. So that's a perfect example of really disrupting industries where a new product or service is put forward. Now, with the businesses now, there's a lot of things such as health tech, AI obviously is massive, VR is a big thing. And they're all kind of new industries. And I'm also seeing a lot coming through for sustainability. So, which is really positive move. So any of those kind of newer industries, if the company is quite young and they're trying to introduce a new product and they're wanting to grow quite quickly, then this is a typical startup. So as I said, main purpose is to grow quite quickly, and to become successful, they obviously need to get product market fit, which I've talked about before, and I'll link that one. And then also they want to generate revenue and get clients, returning clients as fast as possible. And obviously to fund that, they want to attract investment to help scale these operations. So, and this is a big part of being a finance leader, is assisting both how to get that level of growth and as fast as possible. So looking for profitability measures, return on investment, but also preparing the business for investment. So what can you do to make it look like a good investment? So startups are really focused on solving a problem and filling a need in the market. They're usually using new technologies, a new solution, and it's all about innovation. So because of that, they're not afraid to take risk and also will look at pursuing untested business models. So they believe that these kind of innovation ideas will pay off in the long term. And they obviously, as I said, their first goal is to get product market fit. So as a finance leader, sometimes, particularly if you're coming, say, from accounting or audit, this can be a real challenge, moving from a really safe environment where you're looking to make sure that all the T's are crossed and all the I's are dotted, to a startup that's basically quite chaotic, and things often don't work and things often do break, and sometimes things don't reconcile. And so it's working in that kind of environment and trying to piece it all together. Being a finance leader, you also are leaned on somewhat to identify risks and try and mitigate against those risks. But unfortunately, there will be an element of risk that you just have to take on. So with that fast growth scale up stage, this is generally, with a scale up, this is generally when the business has achieved product market fit, the customers love them, they've had initial funding, and now it's time for them to get away from, say, sub 100 headcount and move into that larger organization piece. So they're still very much fast paced. It's still quite chaotic. It's still then putting in processes and controls in place so it can scale up, as the name suggests, into that larger organization. So it is quite a long process to get from that initial startup phase, which is usually the first few years, and then the scale up phase can also take quite a few years before it's a really established large business. So startups and scale ups really do face a number of challenges. The main issues really is fundraising. So whether that's equity fundraising or debt fundraising or both. Another big problem is attracting and retaining skilled workers. So obviously employees do need to take on an element of risk because startups don't always succeed. So, you're not guaranteed that you'll have a job for the next 10, 20 years like you would in a large corporate. There's also an element of taking on equity when you're an employee, and your salary is probably not going to be as high as it is if you work, say, for a bank. So you're probably going to earn more if you get in the bank in the short term. However, there is an opportunity to earn more, because if you work for a startup that's successful and you have equity, then potentially if you stick around for an exit, you may get a bumper payout at that stage. But it is a risk and it's not guaranteed. It's also a challenge because you're developing a brand. And so that's both a challenge for attracting new employees, but it's also difficult to do that in order to generate revenue, word of mouth, those kind of things. And obviously building a strong business model is also a challenge for startups and scale-ups. So to go through that, so as I said, fundraising a big part. They may not need, at that early stage startup, particularly if it's all online, they may not need a significant amount of funding to launch the business, but they potentially may need to keep fundraising until they get product market fit. And then the big part is of funding the growth. So once you've achieved a product or service that the market really loves, it takes a lot of money to then grow it if you want to grow. So whether that's investing in a sales and marketing headcount, whether that's investing in a tech and product team to really develop the product, or whether it's money to pay for marketing acquisition costs, all of this needs a lot of investment. When you're going through that growth phase, you probably won't be profitable because you're investing into the business. So this can take many years. So obviously it's a big challenge. As I mentioned, attracting and retaining employees that are really passionate about its goals, are willing to take and make that business to come to success. So you may be able to attract lots of people, but can you find A players? Can you find people that are really going to drive the success of the business? And this can be really hard to find people if you're pre-revenue or you don't have an established brand. So there's lots of really skilled workers, but aren't willing to take on that risk. And aren't willing to look at a business where they've never heard of them or they don't make revenue yet. So some people also don't work well with these sort of businesses because it is very changeable and can be very fast-paced. And then fast growth businesses, startups and scale-ups, they really need to develop a sustainable business model. They really need to allow and grow the operations over the long term. So this is a big one I find also with finance, but obviously with operations. In that early stage, a lot of tasks are probably quite manual. You may find that management accounts and everything is still in Excel, particularly if you've just joined the business. And there isn't a real clear understanding of what the costs are, the revenue streams, the margins. And so they really need to establish all of those things as they grow. So when you're a finance leader here, you do need to reiterate and implement changes in operations, whether that's in finance operations or operations in general, so that it can scale. The last thing you want is a business model that's really, really manual, and then you achieve, say, 200% year-on-year growth, which is an unheard of still today, and your operations can't deal with that and you lose customers. So there is a lot of work to establishing this, but then the trade-off is you don't want it to be too bureaucratic and take away too many resources as far as putting in elements of control so that the business can pivot still and be quite flexible. So it is that fine balance. So what's quite unique about this for a finance leader and for the finance role, I have already mentioned a couple of them, but one of the biggest differences I found working for a large corporate and then working for a startup, and it was quite obvious when Amazon purchased LoveFilm and then having to work for a large corporate, is the speed at which decisions are made. So in a startup or scale up, you will find, particularly in a startup, decisions are made on the spot. They're often made without any data verifying things, which sometimes works, sometimes doesn't. If you're in a meeting, just many decisions may be made quite quickly. Whereas with a large corporate, sometimes decisions can take weeks. I remember quite distinctly in Amazon, we wanted to change a particular policy for one of its small business units, which was LoveFilm. And I had to write a memo. We had to go through it with 10 different people. It was then discussed in Seattle. Then we had another meeting, and it was probably about 6 weeks before a decision was made. And then we had to implement it, but we had to implement it over a certain time. Whereas if it was in a startup, the decision would have been made on the spot and we would have implemented same day. So you do need to be ready to make quick decisions in order to take advantage of new opportunities and potentially stay ahead of competition. So finance leaders need to also be able to make decisions quite quickly. They need to also analyze quite quickly, potentially understand financial data fast, identify trends and risks, and then provide actionable insights that can inform these strategic decisions. So if you are the type of person that can take a really long time to make a decision and you need to go through all of the data and you can't do that quickly, then potentially this industry may not be fit for you. I'm somebody that likes to make decisions really, really quickly. I sometimes make them too quickly because I haven't looked at all the data points, and I've made that mistake before. However, this is why I suit startups and scale-ups, is because of that characteristic, shall we say. Sometimes it's a pro, sometimes it's a con. A good reference point here is making fast decisions on things that can be reversed. Because I make fast decisions, and again, in this industry, it's if you can reverse a decision and it's not too catastrophic, then it's worthwhile making the decision quite quickly, and it might be worthwhile making decisions quite slowly on decisions that can't be reversed. So a perfect example for me is hiring. I take a while to decide who I'm going to hire. and I will go through multiple interviews because that's something that I don't want to make the wrong decision. I have caught myself in my head, decided I wanted to hire someone 10 minutes into the interview, but over time I've managed to refrain from this decision, potentially put them forward as my favorite, but then go through the proper interview process and the tests that we sent out, the references and what have you, before we make that final decision. Another key difference is the level of risk involved. So startups and scale-ups are much riskier than large and established corporations, particularly accounting firms. And so therefore, finance leaders must be able to manage that level of risk, take into consideration all of the commercial elements and the need for growth and the need to maintain cash runway. So there is a real balance here, and you do have to work quite closely with the founder. I do find that most founders are willing to take on lots of risk. And so sometimes you are going to be the balance there because you're probably the opposite. It's just part of the role. You need to be aware that there may be a bit of push-pull there, but generally understanding that and being able to find a middle ground is best. In startups and scale-ups, finance leaders also need to be much more hands-on in the day-to-day of operations. So as well as the finance department, you may be and being quite key in fundraising efforts. It isn't really unheard of if a finance leader is being responsible for procurement, for HR, for office administration, legal, business intelligence, and even analytics. So there may be an element where you have to roll up your sleeves and take on all of those. And sometimes if you're very early stage, you find a lot of your role may be quite financial controlling, maybe head of finance or finance director, and you may find that you're going to have to do quite a bit of financial controlling work as well as the leadership work. So it is much more involved. This is why we also go through all of the financial operations and the detail in the financial leadership fundamentals, because potentially you may have not done it for very long, or you did it a very long time ago, or you never did it at all. So I do have a few students that work with me because they moved sideways from investment banking and have never done financial control in a finance team before. So we have to go through those things so that they understand it. Often though, with the financial controlling elements, it may just be at the early stage, just because the business needs to get to a certain side before you can hire a financial controller. So it's not forever, but it is at that much earlier stage. I would say Series A up until about a Series B even, you may have to do some of that financial control work. So we do have a financial controller in our team, just because when we work with founders, we know how much financial control work there is. I would say with things like HR, office admin, and legal, it's worthwhile getting your black book together on people that you can reach out to that can help you with this. So whether it's third-party firms that can help you with elements of the role so that you're not making legal decisions for the company and you're not a lawyer. So it's worthwhile finding those people that can help you when it becomes important. Another real difference between finance leaders at startups and scale-ups and working for a corporation is the need for that flexibility. So because the businesses are constantly evolving and changing, that you have to be really quick to adapt to new challenges and opportunity. So sometimes that means you need to be comfortable with uncertainty and ambiguity. So there is a big difference between an audit role and a finance leader in a startup or scale ups. I do find when I've worked with people, when I've hired, say, a financial controller from an audit firm, this is probably one of the hardest things. Some people thrive in it and love the chaos. Some people, it really makes them uncomfortable and they can't handle it and they have to move into the corporate. And then finally, finance leaders really need to be strong communicators and collaborators. So you can't just sit in the finance department and kind of ignore everybody else, particularly if you want to be a finance leader. I find when I was a finance director at Funding Circle, I spoke to my finance team maybe an hour a day, and that's it. The rest of the time I was around the business and speaking with the rest of the business. Not only that, but you also have to be able to communicate financial information and insights to a wide range of stakeholders, which includes the management team, leadership team, employees, investors, and partners. And unless you work in fintech, most of them probably don't have that finance knowledge. So it's talking accounting to non-finance folk. So you have to be able to do that and speak very simply and clearly. So someone who doesn't understand what a P&L is understands what you're talking about. So you have to make sure that you are able to do that. And therefore, if working closely with all of these departments. So business partnership is a really important part of your role. Again, I've talked about this before. I'll leave some information above and below. So I found finance leaders either love this crazy world of startup and scale ups or they don't. It is quite unique. The culture is quite similar regardless of which founder I work with or which startup I work with slight nuances, but roughly the same. So it does either suit your personality and your skills. And if it does, enjoy the ride. It's great fun. But it may also not suit your skills. So maybe if you can identify that in this video, that may help you make that decision if you need to, whether to stay or start in a startup or scale up. But it can be really exciting. You learn a lot really quickly, which is another thing that I really love about startups and scale ups, particularly for someone who a young, ambitious finance person who comes into the role and just can really thrive in this industry. So it can be really exciting. If this is something that is interesting to you and you've decided after this video that you do want to know more about startups and scale up, then as I said, click on subscribe. And then I do have loads of resources, which I'll link below. So feel free to check those out. Otherwise, I'll see you next week. Cheers.